Hi, Ron here. Here I am, and today we're going to focus on finding intraday reversals. I'm going to show you exactly what I did in order to determine an intraday reversal, and show you what I did ahead of time and all that kind of stuff. And going to show you what action I took as a result of that, which is going to really befuddle some people, but you'll see you get my exact logic in it and all that other stuff. By the way, once again, we'll do a little advertisement here. This is for andrewscourse.com, and this is the source that I provide for people who are interested in learning the techniques that I use. Okay, so let's get started. What I did yesterday was I sent out an email 1:41 in the afternoon, which is for California time. That means about almost an hour after the market is closed. And what I said was, "Hey, Mark," and Mark is a course member down in beautiful Kuwait, and he's in the diving business, and he likes to do things with lots of charts and stuff, and lots of lines, lots and lots of lines. And so I said to him very simply, in a perfect world, how about the ES goes down to about 1280 from here and reverses? And what I was referring to was a chart that I sent out a little later on at 7:28 p.m. And here's the chart. And it says here, as I mentioned earlier, the perfect pattern would be to go below 1280 and reverse. The attached chart shows a bit more detail. This is simply a combo of the ORE and the sandbar, and it's actually it's a combination of more than that. What I did was I used the in the advanced course, there's a concept called the golden pivot rule, and in order to determine that, it's simply a matter of geometry. And I sent a copy of that out this morning to all the course members, and then anyway, this was the chart I sent out last night, and of course that copy that I sent out this morning was an after the fact copy, because what happened was prices went down and reversed. Let's see approximately what happened. Okay, there we go. So what happened was prices went down to the ORE line, which also, and then at approximately the same value somewhere around here. Remember I said prices would go, in a perfect world, prices would go below 1280, and they did. They went to 79.25 and reverse. Okay, and so they did that, and so somewhere around here was this approximately was the geometric line for the Danish golden pivot rule. So this is what we had, and this is what the market looks like right now. And so let's take a look at exactly what I did. Well, first of all, if I think that if the market's over here, right, somewhere over here, and I'm in a long position like I showed in yesterday's video, it would make perfect sense to either go short or get the heck out. And since as I've been saying for the longest time, I think the trend is up, and I really am not that crazy about going against the trend, then it would make perfect sense for me to just step aside, right? So what I did was somewhere around here, somewhere I took profits from the position that I put on way down here somewhere, and then stepped aside, and let's see what I did after that. Well, this morning I got up, and lo and behold, the prices did reverse, and so I wound up putting on 2 NASDAQ positions. And remember the other day I talked about being short the bonds, and I'm still short the bond position. That's a long-term type thing, all the way from way back when, and it says here loss of $812. And while that's true for the day, doing a paper calculation, the actual position has a significant profit, because remember that the short is run from 145.04, and we're presently at 143.21. So let's talk about risk. This is not for the faint at heart. even though there's very little in the way of positions on here, it's actually a position of 200 that has a total value and risk effectively of $230,000 and change. So you know that going in. This is not something to toy with, right? So this is something to take seriously. And so wait a minute. Now, if I thought the ES was going to reverse at a certain value, yeah, well, why didn't I go in the ES? Why in the Nasdaq? Well, let's take a look at that. That's a little befuddling stuff here. Okay, if we take a look at the different ones here, here's the SPY, which is the ES effectively, IWM, the Qs. We can see here that the SPY is down a little on the day, the Nasdaq is up a little on the day, the IWM is a little up on the day, that's the Russell, and the Dow is down a bit on the day. Now, this kind of action is not unusual. And so what happens is I ask myself the question, I say, well, if prices are sometimes going to go up faster in one sector than in others, let's say defining the sector as the Qs, as represented by ES or SPY or IWM, how am I able to forecast which one? Well, I'm using a very, very straightforward and simple approach. Let's say we're just going to do the Qs versus SPY, and we'll look at a chart of that, okay, and see what that looks like. Well, this is the chart I'm looking at, and so this chart here I interpret to mean that the Qs being the Nasdaq, even though they've come down considerably, have a pretty good shot at going up more than the SPY. Okay, so being a bit stronger than the SPY. That's my interpretation of this, and that's why I got in the Qs rather than the SPY. Okay, so that's and this also is something that's interesting to consider when considering if you're going to trade the Qs or the TF, which is the Russell, or if you're going to trade any one of these other vehicles, YM, which is the Dow Jones Industrials. So this way you have an opportunity to profit even when the market is in a sideways movement, because this kind of behavior, down 46, up 20, is pretty much a sideways type movement, and there's very little money to be made in the sideways type movement, except if you're pushing the stocks that are likely, or you're sitting on stocks that are likely to make a pretty spectacular move. This one is not for the long side down there, yeah. Okay, and so so these are the stocks that our guess, my guess is that they are going to make a pretty spectacular move. So anyway, so consider this, that there's more to trading than just finding turning points. There's also deciding, if you decided the market's going to go up, is it which one's going to go up faster? Okay, and that's an opportunity to decrease your risk and increase your profitability. Okay, so having said all that, hope you enjoyed this cute little thing on how to find turning points. That's what we did was really straightforward and simple, and apparently last night was a perfect world in how prices went down to here and reversed. So I thank you for your time and see you next time.